I want to go back to something you were talking about a few weeks ago before we get into Jackson Hole and what we could expect to hear from Chairman Powell. You said it's too early to talk about a hard landing when others were talking about a hard landing. You said the middle part is difficult to read. Can you walk us through all of that again? Because I think the data over the last week or so validates your approach.
Well, this would be a very different Jackson Hole conversation if the data didn't break out the way it did last week. What we saw is there's still strength in this economy. You saw it with the consumer, you saw it with the job market, and you saw that inflation was going down. And so, yes, it was way too soon to talk about recession or a hard landing. And I think the goal, to me, for this Jackson Hole conversation is to put the brakes on the fear-mongering about the recession and tell us what normal looks like. We, as an economy, either Main Street or Wall Street, we don't have a good view of what a normal economy looks like, not in the unemployment rate and not in the inflation rate. Remember, we're coming from a period where inflation was too low before the pandemic, not too high, and where unemployment was below 4% comfortably. We're not in that regime anymore, so what does normal look like?
Can we tease out your assessment of that? What do you think normal looks like? What would you say if you were Chairman Powell this Friday?
Well, first I would make it clear that we are not going to do an emergency rate cut for something under 5% unemployment rate. That was ridiculous. I would shape that narrative of what is the natural rate of unemployment for the economy. The second thing I would do is talk about this framework. Now, I know this is a conversation that the Fed will actually have next year, but we left the pre-pandemic period with a Fed who said that they were comfortable with inflation peaking above maybe up to 2.5%, that we would average that 2% target. Well, we're not in that regime anymore. So what is the comfort zone around the target that the Fed was willing to promote? It may not come in this conversation this week, but it will certainly come at the end of this year and into 2025.